I've done a workshop with Matt and customer journey. He's awesome.
All right,
So
I'll get him involved.
I'll tell you on this, plug for Matt May. And two, the power of the network and community. Last year, you're like, hey, maybe Pablo might be interested in coming down to this CEO summit that we're doing in Miami.
Oh, AJ wants credit.
I do.
Couldn't have done this without you, AJ.
I'm giving credit to Pavilion and the power of like the network and connections that we've made over the years and like how this actually works. People always ask, how do I become a consultant? How do I do this? Go talk to people. Get curious.
You got to be plugged in. Yeah.
Yeah. It's silly.
So to add to that, I met AJ through CEO Pavilion. Insight Partners and STA are partners as well. They're number one partner, actually. And AJ ended up being the reference for us for Insight Partners.
What the hell? Where's my commission check for all these?
It would have been a big one.
You're an ambassador. You're a shareholder in Pavilion.
Yeah, that's true. But I'm also going to plug this in QuotaPath and like show you both the commission check that I'm going.
This is Top Line.
Let's get started. Welcome, everybody, to episode 2 of Top Line. It's me, your host, Sam Jacobs, CEO Pavilion, with my co-hosts, AJ Bruno, Anthony Bruno, Anthony James Bruno, CEO of QuotaPath, and Asad Zaman, CEO of Sales Talent Agency. Welcome, everybody. How are you?
Hi, guys.
Great. I feel like we got upgraded this week, Sam. You said co-host. I'm not sure if we were co-hosts last.
You've always been co-host.
Looped us in. This is good.
I consider you a co-host. All right. We've got a few items on the agenda today. One of the I think it's just always useful to talk about the state of the market. And I'll start off with, I don't know if it's a hot take, but here's my take. And I would love everybody's reaction. So I got a call today from my friend Jocko Vanderkoy, and he called me and we were talking about what's the outlook for the rest of the year. And Asad usually has more of the data points, but I have the anecdote, the vibe. So the vibe I have is that I feel like the tech ecosystem got the recession that is coming to the rest of the world 6 to 9 months in advance. And I equivalently think that that's potentially a reason for some optimism through essentially like September. So not quite Q4, but like heading into the fall. I think Q2 is still going to be tough, but I think this is my take on the state of the state, but that a couple things are happening. One of them is that, and Jason Lemkin pointed this out as well, which is that the sort of shaky, we're starting to come into the period of time when deals that were signed and are up for renewal were signed in a moment of duress in the first place. And so they theoretically would be tougher, more resolute, more durable customers than flaky customers that signed on maybe in like January, February of 2022, and then were the first to cancel in January, February 2023. And then I'm just cross-referencing the labor report from, last week or 2 weeks ago showing that the economy added thousands of new jobs, whereas everybody in tech still I think even Meta announced more layoffs today. So my point is, my take on things is that we were the canary in the coal mine on a global recession, and we will be the leaders coming out of it as well. And that things are going to start to ease and improve probably in like September/Q4. But I don't know. What do you all think? Asad, let's start with you.
Yeah, I hope you're right. So let's start with that. Amen to the perspective. I think I also feel like towards the end of the year, things will start at least stabilizing. You'll see more rationality in the market. I don't think it's going to be booming, but you first need some stability and then the next few things happen. But when I look at the situation that tech went through, it has everything to do with the pandemic, right? Like the pandemic happened, we had low interest rates, we had quantitative easing, and you had a record amount of demand and revenue growth for tech companies because of pandemic-related trends. And that led to a situation where investors were really fighting to get into these deals. They put a record amount of money in the market, and they used valuations a bit too much to win those deals. Once you had inflation turn up, you basically have a situation where interest rates have to go up, and that has a massive implication on valuations. Public market corrections are really easy. Private market corrections are really hard. And these private market valuations had gone up to like 50 to 100 times revenue. And those have not come back down. And so I think a big part of what tech is going through is that these companies raised at such insane valuations that it creates a real issue for them to be able to raise their next round. A lot of these companies raised in 2021, right? So you hear about the fact that they've been able to get by till this year. But at some point, something has to happen. They need to raise. And if they can't raise, then they're going to have to change the structure of their business, and that's going to have an impact on layoffs. They'll either get acquired or they'll actually be able to do some form of down round that everyone's able to stomach. But when you speak to investors, there's still such a significant disconnect between what those companies want from a valuation perspective and what investors are willing to do. So when I look at the overall economy, you see some great signals, right? You see signals like inflation is stabilizing, wage inflation is coming down, rent inflation is in control now. So the overall economy, I think, is at least trending in the right direction. But I think because of how high valuations went and how crazy things got in this high risk, high upside asset class, I actually think that we felt the pain more earlier, and we might continue to feel the pain a little bit more than other sectors. That's how I've been feeling recently, purely because of this valuation issue.
You know, I was bearish. I jumped in. I came in hot last time we had this conversation. So it's kind of funny. I'm easing my bearishness, but I just think it's so interesting that the data is so fast and furious that we can have this conversation and have a different outlook in like 2 weeks' time. It's just we know, like, you think back to the 5, 6, 7 year real bull run. I mean, we had 10-year bull run, and like this wasn't the conversation, of course, that we're having of it. So it's just looking for those signals. I'm going to still stay a little bit more bearish though, Asad. And I think it's for what the reason you just said is because there's some seams breaking apart for some of these companies. I have a friend's company. Well, actually, he left the company and he was like, AJ, they had been reporting like 12-month CAC. I know it's like 57 months. I know it's 57 months. And that's
57 months is not a company.
It's not a company.
You need to like walk away from that business.
Yeah, but it's like tech-enabled services where they're like saying, hey, this is a SaaS, this is SaaS, this is SaaS. And like you can ride back to the WeWork days of like, oh, WeWork was a SaaS company, but what? And so there's a lot of those who are just putting together the scaffolding of what a tech company is. And we had such a challenge in the supply-demand curve for engineers last year. Don't forget. We're paying a ton of money for engineers. We're grabbing as many people as we possibly can. These are not experienced folks that are building architecture in these infrastructure in these platforms. And so a lot of it is still the fake it before you make it. And I think that is like still where it is. And Sam, to your point, I mean, yeah, we had this like the dire situation on new business and new contracts and new customers. And so like a lot of those that weren't fit are going away. But a lot of those companies were all like their first year selling, go to market was last year. And so like I think just a lot of that is still going to get pulled away. There's going to be a separation, of course, where we'll have some companies that are just most likely going to fail. Down round would be nice. I think that would, by the end of the year, they're hoping for that. But I think you're going to see some wind downs in the seed Series A world.
I think a nice way to look at the tech world is breaking it up into public companies, growth stage companies, early stage companies. And the dynamics are very different for each of these three buckets, right? Early stage companies have stayed quite stable from a fundraising perspective because they didn't have that much of a valuation problem to deal with. And we do know that there's a record amount of dry powder on the sidelines. Investors don't mind getting into deals.
Is there? I've heard that. What is that? Like, what's the data currently?
I've never in years and years of doing this, I've never heard that there wasn't a record amount of dry powder.
Exactly what I'm saying. Yeah.
Well, we can assume there's lots of it, right? They've got money, they can spend the money. And if they find good deals, they'll spend the money, because you can see that in the Series A and seed round data, right? You're seeing that these ones have stayed almost in line with 2021 numbers. What's really struggled is that mid-stage, like growth stage companies. And I think those companies, there's a lot of pain that still has to figure itself out. But you've got like the early stage that'll be fine, the mid-stage that's a problem. And I think the later stage that are publicly traded, they react to market dynamics so quickly. Their valuations came down like this when interest rates came up, right? And then as the overall economy stabilizes, I think they'll see some benefits of that. I think this middle stage of growth stage companies, they're almost in no man's land. Like, what happens with them? I think there's a high risk that hundreds of thousands of people lose their jobs because these people are unable to go and raise a round at a valuation that made sense for investors to get in on.
Yeah, I agree with that. I come back to a couple things, and one of them is one of the topics on our docket. One thing I come back to is still, which we talked about last week, and we can probably talk about it every week, which is the mindset of the CEO and the minds and sort of, Latney, she was the one that planted this idea in my head of the infinite race versus the opposite would be something with a short-term duration, where like you're pushing so hard for a specific outcome within a specific period of time. And then it's reorienting your mindset to be like, if I have to do this forever, I'll do it forever. And of course, one of the ways that you enable yourself to do it forever is to work towards either profitability or such compelling unit economics that you're always fundable. And I think to your point, Asad, there might be companies, I mean, honestly, given our Q1 growth, which was not very much for Pavilion, you could say like, well, maybe Pavilion's in a no man's land, but I don't view it that way because we're profitable. And what we're really doing, and this is why I'm like so excited right now, what we're really doing is we reorganized the company to fix key product dynamics. And if we can stay flat while we do that, then we can layer on growth investments, knowing that our baseline is flat when we have no growth engine, which I think is good. And then if you add a growth engine, then you can get to a new baseline based on how much you can grow. So I think like one part of what I'm thinking about is just how do you make sure as a CEO that you can do it for as long as you need to, and what are the jobs that the CEO should do? And then sort of tangentially related to your point about these large growth stage companies with lots of employees is I don't mean to sound cliche, but the rate of change in AI is startling.
Yeah.
And I think it's not going to be 5 years. It's going to be a year when you're going to have all kinds of different services that are really like, leveraging either OpenAI's API or some other kind of API, but where you need far, far fewer people to do jobs that these large organizations now require hundreds or tens of dozens of people to do. So a couple different thoughts there.
Well, Sam, I mean, you do bring up your initial point is really good. And what I'm hearing you saying is you're like the simplifying the businesses. When everyone tried to do everything last year. And so CEOs, this is something that we talked about in our board meeting that we just had, of just like, how do you boil it down to the 2 or 3 most important things that your team needs to go do? And then from a vision standpoint, you need to make sure you're just like very, very, very clear on those things. And then like on the AI piece of it, it's so funny. 2 months ago, we had a board call, and we were talking through some of the AI, and I was just asking what they were hearing. And the general feel, and this isn't to single anyone out, but it was stated pretty directly of like, don't get distracted. Don't make that distracted. This was literally just in February. Don't get distracted by that. The call today, we had to have like 3 slides on generative AI. They were like,
are you serious?
We had 1 slide on it, but I am serious. There was like all the comments were coming in, and we talked about it from a vision standpoint. And one unnamed board member, there's an AI piece to it, but it was very clear on the value prop. Was like, hey, I'm really excited to see what that generative AI piece looks like. I'm like, well, I get it. So it has just like, that's just like the cycle is flipped, but we have to keep things simple as business owners, and the profitability part of it. I just like love that. It's like creating a sustainability. Although to that point, we talked about CEO coaches a couple weeks ago. And when I had my latest session, I just asked him, like, I know he has like 20 CEOs. How many of them have like said, hey, is this still the right role for me? Or like looking at it, he's like, oh, and he went through, and it's at an all-time high. But he's
Wow.
like, I have a CEO that's looking to be an executive chairman, one that wants to step down, the one that just brought in a COO, one that we're working on a transition plan. So there's just a lot of CEOs that are flagging. They're like, "Ooh, I did the race to 0 to 40 million. That felt good. This doesn't feel as good. I'm going to tap out. Like, I don't think I'm going to go into the infinity race anymore."
It's also like there's just a smaller percent of people who can do business effectively in war times, right? Like it's really easy when the market's booming and things are good to be able to generate momentum. Like you see this with salespeople, right? Like you would look at the resumes of salespeople for the last couple of years and everybody was crushing quotas. You saw companies that were selling things that were nice to haves theoretically, but they saw deal dynamics like new business and retention that made it look like it was a mission critical solution. And now you kind of see in these markets what's what. Those companies that are not mission critical are seeing high churn. They're seeing really struggling with new business. You see salespeople that, 20, 30% of salespeople were crushing targets. Now like 5% might be able to do it. So I think you just see a shift. Like some people can do both types of markets. They're very few and far between. And then there's some that can work effectively in a hard market. They just don't do it in a market like this. And that's a hard lesson to learn for a lot of people. On the AI thing, I think what's really interesting is that no one knows what happens by the time this becomes ChatGPT 10, right? Like maybe none of us have jobs. Maybe like everything changes. But in the near term, this is very much a productivity enhancing tool, right? Like this is an amplification tool, and an amplification tool that won't just add like 10, 20% productivity increases to people. Like this could significantly change what a developer and what a salesperson can do. Like a salesperson doing $1 million worth of revenue as a quota right now, can you get them to 4 or 5 million with a tool like this? And you can at least hypothesize that. And on the developer front, you're already seeing such massive increases in productivity from like the Copilot that they've released. And so I think that fundamentally changes the number of people per company, the margins of the company, but also changes the pricing model that they have to take to market. Does seat-based pricing work still when every company has less seats available, right? Like, does this lead to a drive towards like a different pricing model, maybe more consumption-based pricing, things like that? I think that'll also be like within the near term that some type of shift there might have to happen. And I think that's a bit interesting.
Yeah, I think, I write this, I just started, by the way, like little pro tip that AJ told me one time that he wrote a weekly investor update, and I don't know why I didn't do this, but I started writing. Sundays were always work days, and then for a period of time they stopped being work days, and now they're back to being work days, and I love it. And so I write a weekly investor update, and then I write a company update. And we're not a big email company, but I just want to have some kind of like, here's what's going on, zoomed out against the backdrop of our 3-year vision and our OKRs. And part of what I said in one of my company updates was, please, 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 everybody spend an hour a day or 30 minutes a day on ChatGPT. Please, like figure out, because I think there's this tendency to think that it's like a parlor trick, and people don't realize how powerful, or many people do actually, since it's like the fastest growing web application in history, but many other people do not realize how powerful AI is, how powerful generative AI is. So for example, I used it to write the outline of a presentation on the new world of revenue generation. I'm really, really hoping that all of the engineers are sort of whatever the opposite of threatened is, because to your point, Asad, GitHub Copilot is like writing, I think not the majority, but it's a plurality of code that is generated from developers right now that are using it at all. It is writing like a meaningful percentage of their code. So I completely agree with you. And I think that in the short term, it's a productivity enhancement, and the long term, I almost don't know what happens because it's changing so quickly. And it makes me a little scared in the sense that like maybe I need to like think about M&A sooner than I had anticipated, because I just need to like cash out of this economy before the rules are changing so rapidly that I can't even keep pace. And that way, I think if you zoomed out, given the rate of change in AI right now, I think this is the singularity. Like that's what is happening right now. When, AutoGPT is like this Python enabled connector tool that connects different AI agents through ChatGPT. And if you know how to use that, you can do all kinds of complicated tasks. And that's just, ChatGPT came out in November.
I know.
It's been like 6 months.
Yeah.
And at any rate, I think that the world is changing more rapidly than I can personally grok it. And one of the things I hope is that my company is that the people at the company are really trying to embrace having a window, like a browser window open all the time, that can be your personal assistant, where you're asking questions, you're asking it to formulate thoughts, you're asking it to write emails, etc.
I just dropped in the chat a recent tweet. The single highest leverage thing that you can do right now is 1, learn to code in Python. 2, learn to use the
Auto GPT. Yeah.
Yeah. And I mean, it's something that it's
by the way, you can use ChatGPT to learn how to code in Python.
so like this is the singularity. But it goes around and around and around.
No, but really quickly before to your point, AJ. So I wrote into ChatGPT, I want to become a programmer. What do I need? And it's like, you need this, this, and this. You need an IDE, an independent development environment. I was like, I want to do Python. They're like, all right, download these things. Then I'm like downloading it in the terminal window. There's like, I type into ChatGPT. It's asking me for a password. ChatGPT is like, that's probably your main, your main computer password. Why don't you try that? I'm like, oh, that worked. Like it is wild. It is incredible. Anyway,
that just cracks me up. I'm just sitting there thinking you're like talking to like a help desk right now. You're like, oh, to open my window, how do I do that? It is also just like throws. We were talking about this, like the web 4.0, whatever. Like this is what it felt like when the internet was born.
Yeah.
Right? This is like, oh, how do you use DOS? How do you where does this go? And I'm sure they didn't have great podcasts like this one to talk about their feelings of they're vulnerable and their insecurities, but like this was the feeling. I remember walking home and my dad had gotten Prodigy and was like, it was 1994, and kind of showing me, and I was like, can you buy? I remember asking the question, can you buy stuff? And he's like, well, here's this encyclopedia. Like, why don't you just see if that has it? That was the chat GPT of like the middle schoolers, was like the encyclopedia that we look for. But yeah, I don't know. It's still 6 months. I think we're going to have a very different conversation. We all know this. Board meeting went well. Thanks for asking, guys.
How did it go? Everybody canceled at the last minute to be in person, right?
Yeah, they were all, they're like, we don't need to be in person. No.
They heard you had tetanus.
That wasn't my issue today. I did have it, but we had a 3-hour board meeting, went really well. Our new office just opened. I did make a major calculation though.
You opened a new office?
Yeah.
How many square feet?
I don't, maybe like 15,000. Probably.
Oh,
Lord.
You could probably seat. I think we get it at the.
You must have gotten an amazing deal. I mean, everybody's talking about like
looming
debt crisis in commercial real estate.
Mm-hmm.
Yeah, no. AT&T was in this building before. They did the build out and they opened it in February 2020. And so there's only ever been like 3 people in it. It's a beautiful, beautiful building. That's half of it.
Wow.
Yeah, with real live people.
I have a question for you.
Yeah.
What is a good board meeting?
Oh, okay. So
have you had great board meetings? And I don't mean great like they high-fived you on all of your initiatives, but that you solved or they led you to solve a critical strategic issue for your business, either at Trendkite or now.
I've had, to answer your question, I've had mostly not good great board meetings. If that's your job, if that's how you're judging it, then no. But Q1 for sure was a great board meeting. This one was good. I don't like Zoom board meetings. I actually dislike them a lot. It's really challenging to read the room. There's a couple board members, my Insight board member, I rely on her nonverbals in a good way. Like I kind of engage on those. And she was in Europe this week. It was supposed to be in person. Everyone had
She was firing a CEO, right?
No, I don't know. No, I don't actually know. She was in Norway. At least she has any companies in Norway. But yeah, she was over there, and then we had the meeting. It went well.
I have more questions though. Can I interrupt?
Yeah, go for it.
How do you have your whole executive team in the meeting for the entirety of the board meeting?
No, we have a closed board business session. It's so ours are 3 hours. We prep by sending the full operational deck, which is a large deck. Yeah. We're very ops heavy, so there's a lot of data. And we were diving into some of our customers that had churned, so a lot of data there on the new business front, just a lot data heavy. And then they commented, and the story that we wanted to tell was like, okay, here's like some of the problems. Here's how we're going to fix the problem, and then here's how this leads to the vision piece of it. I don't do operational reviews, but the entire management team is there. It's a very strategic. They're always strategic. What goes well in good board meetings is they're strategic. They're never readouts of the slides. That's like the most important thing that I've found over time, is that you're not there for a CEO to do one of two things. One, just to talk the whole time. And two, even worse, is to take notes and like be like, oh, I'm going to go do that thing. I think that's the worst thing that founders and CEOs do, the new ones do, is that they think that when the board member tells them something that they have to
right.
Yeah. What flipped for me, and I mean this in a good way, is like when I started to realize, like, look, I'm the operator. No one knows the business better than I do. Like, they don't. They're going to question and support and like understand, try to seek to understand. But at the end of the day, it's my company. And that's something that I think like people get finicky with boards at sometimes, and especially when there's like different dynamics that go on. But
I think that happens for early stage companies with first time founders a lot, because when you first raise your seed round, your first time founder, there's so many blind spots, right? And so your board is actually really helpful. Your active board members are really helpful in you being able to like see those blind spots. And they provide tons of value in those really early days as you're building the foundation of the business. But over time, that value becomes less and less as you gain that expertise. And now it's about operating the business and moving forward. I think like as you gain momentum, it becomes less and less, but they stay with that old mindset of, oh, these people are so helpful. They've given tons of great advice. That advice was good. And then they do that note taking of if there's a piece of advice that comes out, rather than like going through the intellectual process of like discussing it, debating it, seeing if it's the right move or what other thing we can do. They just write it down and decide, let's go do that. But I think it's because of those really early days.
Yeah. Asad, do you have board meetings?
Yeah.
Yeah. How many do you have?
I love them.
You love them. How many do you have a quarter?
We have one a quarter. So one a quarter. When I first took over, because they were like, we've given this kid the company, let's sit down with him a little bit more often. But over time, we moved to like one a quarter, sometimes maybe two a quarter if we need to connect. But yeah, board meetings are board meetings. Like they can be they can be good, but I rarely does a person walk out of a board meeting being like, that's an absolutely amazing meeting. Sam, have you had an absolutely amazing board meeting? You're two-person board though, right?
We just added somebody. We just added Steve Wojtrecki, the former CRO of Klaviyo, and longtime CFO. And I had, it's really interesting. I had, so when I raised the money from Elephant, they got, the common gets 2 votes, the 2 seats, and preferred gets 1. And I left the common seat open. And so the consequence of that was that I got 2 votes and they got 1. And for a while, that was great. And then I just realized that, like, I want more. I actually do want more expertise. I want more thoughtfulness at the executive level. I still control the company. Whatever the board composition is, I still own the majority of the shares in the company. So it would be very hard to get rid of me. I don't even think it's possible, to be honest with you, unless it's like, gross negligence or, I'm like running naked through the streets of Times Square or something. But like. And it's been an evolution for me, because on the one hand, you just have to, it just takes experience, because the first time when you're the first time that you go into a board meeting, maybe it's intimidating, it's scary, and you put them on a pedestal. Then at some point you get a little humility. You realize they shouldn't be put on a pedestal, but they're not idiots. And I actually very much appreciate that they're not in the business every day, that they don't have any emotional attachment to any of these decisions. Yeah, they're just like, well, why don't you do it this way? Yeah. And you have to be open and willing to hear that comment, why don't you do it this way? Then that's level 2. But then level 3 is yes, and sometimes you still need to ignore them. And we made, it was just subtly out of alignment. We've talked about this, and Asad, very well that we had this like Pavilion for Teams business where we were going to train all of, the whole sales organization. And we started building out content for live training with Kevin Dorsey and Kyle Coleman teaching SDR school and Ian Koniak teaching enterprise sales school. And these people were incredibly expensive. And the whole theory of the case was that these deals would renew better than our regular membership. And this was from the board. right? So this was them saying, this is a better business. If you can get the team's business to 20 million, that's a $200 million business at a 10x multiple. And you should, and you can view the executive membership business as basically a funnel to that. And then Steve Wytrecki, the new board member, led us through an exercise in December where he said, I don't see how these two things connect to each other. And that was an epiphany and a moment where we realized that he was right. And it's not that we're getting rid of our bulk membership, our corporate business, but it's much more strategically aligned. And we are not going to be focused on being the everything store for sales training and marketing training. We're going to be focused on executive education and executive development. And that was the opposite of what the board said. I'll tell you that. And the board was also, of course, they were the first to push hard for cost cutting and for, doing a reduction in force and doing a reorg. So what's the point of all of this? Do I hold any ill will? Not at all. They've been great partners. You have to take it with a grain of salt.
Yeah.
And the main thing you have to remember is that you know your customer better than anybody else. They have an input and they have pattern matching on financials, which is sometimes quite amazing to behold. You'll sit in a meeting with them and they'll be matching numbers in a way that my inexperienced but wonderful head of finance and me are like, whoa, how are they making these combinations so quickly and really understanding everything so so intuitively? And that's because they have a finance background. But nevertheless, the dollars and cents are a reflection of your relationship with the customer, but they are not the customer. And the customer is a human being that you have a conversation with. And that is what the CEO really is responsible for understanding and knowing. So that's a really long-winded answer to your question. Have I had an amazing board meeting? No, I haven't had an amazing board meeting.
Yeah, but you nailed it, though. I actually think you have it in there. You said something that was really interesting on the insight of like, hey, how does teams connect to the executive? Like, how do these two things connect? And I don't know if that came up before the board meeting and you guys decided to whiteboard. No,
that came from an offsite where the guy asking that question wasn't on the board and now he is.
So if you could take that, I mean, like, come on board. If you could, like, that's the type of meeting that would make a great meeting where one of the board members has an insight to that level. It would be great if you could like come in with that insight and then like whiteboard it during a board meeting and get everyone there to get buy-in. It's kind of the same thing you're getting buy-in with your management team. You need your buy-in from the board. And you could have a 3-hour meeting and it feels like a death march, but someone says like, oh, look, you're ICP, you're hitting headroom here, but you're not like down market, you're struggling here. Like, choose a lane. Where do you want to be? Who do you want to be when you grow up? And like that comes up and it's like an oh duh moment because you have a third party objective view on the business. They can pattern match really, really quickly. And my board has this great way of thinking about it, like positive intent and do no harm. I appreciate that. However, it doesn't always feel like that's the case, right? Sometimes where it's like coming from, it's like, wait, what are you digging from? And then as boards expand and you get bigger, there's the political piece of it where it just like all falls apart. That's the problem at the end of the day with boards. If you don't, as a CEO, keep the constant alignment in what you're doing, it quickly gets sideways. And that's why like early founders, they've gotten turned off from boards because once you start a board has a job. And when you continue to invest, a board continues to have a job and you can't unwind that. Like those are just impossible to unwind. So your next board meeting will be great. By the way, I don't do weekly reports anymore. Sam,
I
do monthly now. Yeah.
I like doing it weekly because it helps me. It just helps me like sit down and think through. Yeah. And so I like doing weekly.
Sam, you spend a lot of time every week writing, right? Like between these reports, LinkedIn, blog posts, etc. Like, have you noticed that the exercise of writing things down and working through that helps you with your thinking as well? That's why you leaned into it so much because you do a lot.
I'm big on this like 2x2 matrix of fun against impact. And that's, it's been really interesting recently because, I spend time to your point, communicating outwardly, like we've got this insight partnership and we've got, and I'm trying to recruit great CEOs into the CEO pavilion. And I'm like on the phone with Michelle Tate, the CMO of MailChimp. And, I'm trying to get Kip Bodner to drop into our CMO pavilion. And my chief of staff said, some people are getting a little confused because they're not working on those things. Like, what do you think the number one priority for the company is? And I'm like, that's funny. I don't think I'm working on the number one priority for the company, because the number one priority for the company is migrating our membership to our new digital platform and making sure that nothing breaks. But that's not something I'm very good at. That's not something I'm going to be good at. And so there's this moment where you're like, this is the infinite race, right? This is like, what am I good at? What am I uniquely good at? And that is consequential to the business. And how do I design my day so that I am doing things that I am uniquely good at, as opposed to feeling like I need to project manage the migration of our membership from, one ChargeBee instance to another ChargeBee instance, and to get I don't know how to do that. I'm not going to be good at that. I'm going to be like playing online chess while in all of the meetings because I'm so bored. Like, the best thing for me to do is to communicate. I need to communicate to my company that doesn't mean that that's the most important thing, that just happens to be the thing I'm good at, and that's what I've been spending. And so, like, for example, like this week I opened up my calendar, and sometimes when I open up my calendar, it's like such a friggin' drag, because I'm like, why did I agree to all of these meetings? And why do I agree to all these one-on-ones with these people? And now it's like, after this, I'm talking to Craig Rosenberg, the guy that started Topo. And, I talked to Jocko earlier today, and we just did a CEO pavilion session with Nick Mehta. Like, this is a great day. And that's by design, because I'm trying to think about like where I'm not good at everything. I'm just not. So to your point, Asad, I do think I'm good at communicating. I think I'm good at, and so I want to spend my time building the brand. That doesn't mean that building the brand is the number one most important priority for the company. It's just the number one most important priority for the company that I am particularly uniquely equipped to help with.
Yeah, that's interesting. I think there are these things that are like your zone of excellence, the zone of genius versus zone of excellence thing. I think it's so important to like know what falls into which bucket. And sometimes you have to do things that are super annoying you don't like doing, but there are things that you're good at that are important for the business and that energize you. And I think when I talk to people, very few actually have that understanding of what those things are. And that makes, I think, running a business in a digital economy that much harder, because the economy is hard. Like, business is hard right now, and you do need certain things where you're deploying your time that give you energy. And I think the CEOs and the founders that are not doing any of those things, those are the ones that are like burning out, stepping away, that type of a thing. Because even in a market like this, there are a number of things you can do that energize you. So I find that quite fascinating.
Yeah, I'm curious, Sam, the most important thing around that migration in payments, this is just generally curious. It feels fairly tactical. Like, how did you all choose that was the most important thing for the business? I'm like,
because it's really the central infrastructure layer for our entire digital existence, right? Like, right now we are a bunch of Zaps and Make.com and like random workflow automations. We are on Salesforce now, and actually Salesforce is much more robust than HubSpot, who I also love. But Salesforce in this particular instance is more. 6 months ago, this is a fucking crazy thing to admit. If you had said, am I a member? I don't know that I could have answered that question definitively.
Pavilion?
Yeah. Am I a member of Pavilion? Are you a member? Is so-and-so a member of Pavilion? Well, it depends what email address. Let me check HubSpot. Then let me check ChargeBee. Let me see if that reconciles with the Zoom license, whatever. Right. And so the reason that it's so important is because it centralizes into one data warehouse all of the membership credentials, and then it enables us to provision services. So we're going to have single sign-on so that you go to one place to take classes, one place to update the member directory, and all of it is tied to billing, right? This is for the first time for us, like the unique point of view on this is a member. They are active or not active. With one button, they either become inactive or they become active, et cetera. So it's on the surface, it's tactical, but it is the platform that connects every one of our systems. And that's why it's strategic, because it's infrastructure.
Yeah. I got it. I'm just envisioning you in the background, just plugging things in.
It's not going to be very useful. So, what? Let's talk about one thing that's working. We should wrap up our episodes with a note of optimism. When you think about something that's been working for you the past week, AJ, what's something that's been working for you?
Well, this Claritin's working really well. I will. Side note: I made a miscalculation Austin's known for really bad allergies, cedar fever, but I never got them. And then when I just come like once a month, all of a sudden it happened, and it's really bad right now. And I was like, you know what, I'm just going to take Claritin, because that fixes everything. I've never taken Claritin before, and I took it 10 minutes before my board meeting, and I was just in this like outer body experience of it. So
Was it a good out of body experience?
no, it was not. It was an apology, outer body experience. What's working well? My management team. I feel like I have such a strong team right now, and we can figure this out and like figure out any problem or challenges. And there's a really great connection and interpersonal. I feel like that's working really, really well right now. It's still a lot of problems in the business, but the people that I can just rely on and just call right after this, and they'll pick up and talk through some of these challenges, that's working well.
Was it a process to get there?
Yeah, it's always a process. It's all we're doing as CEOs is we're thinking about up leveling or where they're. I mean, it's still a process, but like that's all you really. If you're like one of your top priorities isn't you're like thinking about your talent of your management team, then you're doing something wrong.
Yeah.
It's probably the one thing that allows you to sleep well at night. Like that day where you're like, I got the right team here. Like that's a very calming, relaxing feeling.
Yeah, I sleep super well at night, Asad. It's no problem at all.
So for me, instead of talking about the business or personally, there was one thing that I found last week that I found was just interesting to internalize, and it helped me a lot, like in thinking about the market, which was like, I went on LinkedIn and I saw like all these posts about people that were just super negative about the market. And you saw like some company had done layoffs. So you saw the 500 posts about that. And then you go online and so you go on the news and Meta has announced layoffs and other companies are doing it. And so it was very depressing that day. And there was just a lot of negative news in the cycle. And so I started clicking around and I found two things that I thought were quite fascinating. The first was, if you look at the number of people laid off in tech between last year and this year, the number is about 350,000, say 400,000, right? Just for the sake of the conversation. Between that, in the last 12 months, just in North America, 1.4 million, 1.3 million people have taken new jobs in tech. And so give it a margin of error, say it's 1 million. That's still like, it kind of blew my mind that so many people had found jobs in this market. And then if you look at the number of open jobs, there's 661,000 open tech jobs in North America today. And that's 2 times as many people laid off globally in tech in the last, 2022 till now. And
how does that number compare? You said 661,000
open jobs and 1.3 million who took jobs in 12 months.
How does that compare to like 90 days ago?
Yeah, so it's really interesting. In January, it was 5 times as many open jobs. And so the reason for that is so many companies, like in our world, when we work with a mid-market focused technology company, most of their sales hiring happens in Q1. If it's a hot market, it'll fall over into Q2 a little bit. And then for the rest of the year, they are replacing people that are not performing or are leaving them. And so you see Q1 is a really active quarter from a hiring perspective. And you kind of see that 5 times as many open jobs when you start the year. A bunch of those jobs get filled. Some of them get closed out, etc. But we still land up in Q2 with twice as many open jobs as people laid off, 661,000. So I found that to be quite comforting, because even the state of tech is challenged, but it is less challenged than sometimes it feels when you read the news or on LinkedIn. And that was helpful.
I love that.
Well, for you, Sam.
Well, for those that are listening, we announced a major partnership with Insight Partners today. They are programming and QuotaPath, of course, is an Insight portfolio company, and they are programming their revenue conference called Drive as part of our revenue conference, GTM 2023 in Nashville. Pablo is going to build a course for us on lean methodology through Pavilion University based on the book, What a Unicorn Knows. And it's just a strategic alliance with one of the best investors in the world. And the consequence of that is, if you're out there listening, what's the point? The point is that, and we've got another conversation with one of the leading executive search firms. STA does executive search, but slightly bigger than just STA. We want Pavilion to be a place where you can access access the best investors, access the best insights, access the best talent. That's part of what this podcast is. We've got conversations similar to Insight going with General Atlantic, with Sequoia, with Benchmark, with Notion Capital, with a bunch of other investors. So I'm just excited because I think that's pretty compelling, right? Scaling community can be hard because community can mean something different to everybody. And if I can display practical, tactical utility from your membership, then I believe that we have, a good path to growth. So I'm feeling good about that.
Sam, super interesting. Two things. One is Matt May involved in this as well. Pablo's co-author.
I haven't talked to him as much. I've been mainly talking to Pablo.
I've done a workshop with Matt and customer journey. He's awesome.
All right, so I'll get him involved.
I'll tell you on this. Plug for Matt May. And two, the power of the network and community. Last year, you're like, hey, maybe Pablo might be interested in coming down to this CEO summit that we're doing in Miami.
Oh, AJ wants credit.
I do.
I'm
giving credit to Pavilion and the power of like the network and connections that we've made over the years and like how this actually works. People always ask, how do I become a consultant? How do I do this? Go talk to people. Get curious.
You got to be plugged in. Yeah.
Yeah. It's silly.
So to add to that, I met AJ through CEO Pavilion. Insight Partners and STA are partners as well. They're number one partner, actually. And AJ ended up being the reference for us for Insight Partners.
What the hell? Where's my commission check for all these?
It would have been a big one.
You're an ambassador. You're a shareholder in Pavilion.
Yeah, that's true. But I'm also going to plug this in QuotaPath and like show you both the commission check that I'm
I think the main thing is that, this is perhaps a longer conversation, but like in the new world where so much is changing, where AI is playing such a disruptive effect, the one constant needs to be that your career cannot just be you going it alone. You need to be plugged into some kind of ecosystem, some kind of resource center. You can call it a guild, you can call it a union, you can call it a community, and it's got to deliver practical value. It's got to be worth the money in a difficult economic environment. And that's
talk about that next week. Let's talk about that.
At a dinner yesterday with a bunch of revenue executives, and there were about 20 people in the room. Only 2 were playing with ChatGPT. It blew my mind. And so at least in that moment, now you had like the 2 people that were playing with it were like, guys, if you don't get on this like tomorrow, you will get left behind when this becomes something that is integrated in all these organizations. And so I think that's also one thing about community where like it helps people understand what their blind spots are. Yeah. And this is a time where you can't afford to have too many blind spots.
Absolutely. This has been episode 2 of Top Line. I'm one of your co-hosts, just a co-host, Sam Jacobs, the CEO of Pavilion, AJ Bruno, Anthony James Bruno, CEO of QuotaPath, and Asad Zaman, the CEO of Sales Talent Agency. We'll see you next week, and I think we're going to try and bring on a guest or 2. Thanks, everybody, for listening. If you haven't given us 5 stars in the iTunes store, please do that. Please write a nice review. If you need to reach any of us, you can. It's easy to do on LinkedIn. You can email me, sam@joinpavilion.com. Get your tickets to GTM 2023. It's going to sell out. Insight Partners will be there. AJ will be there. Asad will be there. And everybody else will be there. Thanks, everybody, for listening.
Thank you for listening to this episode of Top Line. To learn more about the trends, news, and developments impacting the world of B2B SaaS, head to joinpavilion.com, where more than 10,000 of the world's top go-to market leaders go to achieve and unlock their full professional potential.